Good morning, well, good evening and good afternoon if you're logging in from various parts of the world. This is a very, very warm welcome to our webinar that we are co-organizing with the United Nations Environmental Programme, Financial Initiative, and the Principles of Sustainable Insurance Initiative there. My name is Prashad, and I work for the International Labour Organization at the Impact Insurance Facility, which is a part of the Social Finance Program. Just a quick background to this webinar. We at the ILO's Impact Insurance Facility and the UNEP FI Principles of Sustainable Insurance have forged a strategic collaboration to drive insurance industry practices combined with solutions for promoting sustainable development. As a part of this collaboration, the facility and the UNEP FI PSI will work together in disseminating knowledge, including lessons learned and good practices, through a webinar series on topics that are critical for effective implementation of programs with the theme Making Inclusive Insurance Work. Today's session will focus on distribution and technology and how they can create value through more than just sales. We certainly believe that technology and distribution can be vital elements in creating value both on the supply side as well as the demand side. They can deliver value both for the clients as well as enhance viability for the providers by creating both cost and time efficiencies. So we have a panel of experts to discuss this topic with us through the next 90 minutes. But before we get on to to understand the views and various perspectives from them, I'd just like to quickly familiarize yourself with the webinar system that we'll be using today. You should be able to see a webinar system control panel on your screen that looks like this. You can hide and unhide the control panel to get a full view of the slides and the presentation on the screen. But more importantly, we'd like to interact with you, and you can tell us what you think, send us your questions, comments, as well as ideas, even while the presentations are on, through typing in the chat box here. You can type your questions, we will receive them, and when we open the house for question and answers, we'll try and combine those and answer and get back to you on most of those questions. No worries if you are not able to answer all your questions. We will circulate them to our panelists and get back to you as quickly as possible with their views on it. But hopefully, we'll have enough time to answer most of your questions here. Another interesting feature is that we would want to constantly interact with you throughout the webinar, which will be through polls where we would like your inputs on various topics that we'll be discussing. These polls will be open during the webinar, and all you have to do to participate is to click on the answers, and we will show the results soon thereafter. So hopefully it'll be an interactive session through the polls, through your questions, comments, and views in the chat box, and we'll try and understand more what distribution and technology can do in creating better outreach, creating better value, and delivering an entirely good proposition which is sustainable in the long run, both from the insurers and the channel's perspective, as well as from the customer's perspective. To talk more about this, we have a wonderful panel here with us. We have Susan Walls, who works with the South African Insurance Association. She is an insurance technical advisor there and brings with her over 3 decades of experience in various industries and insurance too. So we look forward to hearing an overall perspective from her on what associations can do and what are the trends in the insurance market. Then we have Munir Duri, who is the CEO of the Kifiya Financial Technology PLC based out of Ethiopia, a technology service provider who is very extensive work in technology interventions for financial services, and have created an insurance platform about which we'll learn over time. And then we have M.K. Balachandran from an insurance implementation organization, HDFC Ergo General Insurance Company, who will discuss some ways in which their organization uses technology-led distribution interventions to bring about both cost, time efficiencies, as well as create transparencies in the system. Before we hear from them, I'd like to start understanding more from an audience perspective by opening the first audience poll and asking all of you, what do you think is the usual role that a distribution channel plays? What is the first thing that comes to your mind when we discuss distribution or we talk about a channel partner? Is their role sales and enrollment? Are they there just for payment collections, premium collections? Can they also play a role in educating the customer, informing them what the product is all about and what the product can do for them, and therefore create an environment for conducive to insurance? In addition, can they also assist in claims? Are distribution channels just there for sales, or can they play a part in claims too? So please go ahead and vote now. The poll is now open. You can choose one of the alternatives given on the screen: sales and enrollment, payment collections, consumer education, assisting in claims. We seem to be getting diverse responses here. Can we keep the poll open for 5 more seconds, please? Okay, can we please close the poll now? So most of our audience seems to be of the view that the distribution channel is there for sales and enrollment. Yes. A lot of us also feel that premium and payment collections is an important part of the channel. Interestingly, a lot of others have also commented on the fact that the consumer education and telling the people what the product is all about and how it can help, as well as assisting in claims, is an interesting role for the channels. Let's see what we have as far as this is concerned and what our panel thinks about it, and how can technology help in doing some of these issues. And let us understand how best these can be implemented. Our various projects that we have done, and especially in markets that have not been reached till now, low-income markets, hard-to-reach markets, vulnerable communities, one thing is very clear, that the distribution team, the channel team, the person selling the insurance is perhaps the first and in most cases the only contact with the customer. The channel is the person who a customer sees and goes to in case of any requirements as far as his insurance policy is concerned, or even understanding of the policy is concerned. So therefore, it is incumbent on the distribution channel and the distribution person to do not just selling, as 65% of you have said, but provide an entire customer experience to the communities and the individuals there. So therefore, the roles can extend not just for contacting and premium collections, but also education, promoting, renewals, and ensuring that there are repeat purchases of insurance, as well as acting like a friend and doing counseling in terms of what products would be most suited, not just selling the most high-priced product, but also advising about what other products are available, how they can help, and how they can assist the customer in making his lives better. So we certainly believe that the channels have a far larger role than just sales, which brings about its own set of challenges for the insurance industry. But insurers are also evolving in this micro-insurance space, inclusive insurance space, and we've seen a movement towards them working with a wider range of distribution channels, more kind of channels and more kind of organizations than just agents. They are working and assisting distributors to do more than just enroll customers, and they are also forming more partnerships between insurers and distribution partners as well as technology service providers by attempting to deliver more value. Just a quick look at the variety of channels that are now available. We deal, of course, with agents and agent networks, but in addition to that, as you can see on the slide, we have mobile network operators, we have post offices that are selling insurance, we have retailers that sell nice over-the-counter pre-underwritten products, community-based organizations that get together and identify products that will work for the companies. Of course, financial institutions like banks and microfinance institutions that have been working in financial services are a natural fit for the insurers. In addition, we also have employers now who offer insurance covers for their employees. So we have a plethora of organizations, but all of them are trying to improve value by not just one-on-one contact, but using technology to help them in reaching out to many customers and therefore providing scale and building efficiencies into their operations. At this stage, let me hand it over to the panelists and understand from them what they feel about this entire thing of digitization, use of technology, use of distribution networks, and understand from them on their experience and what they have been doing in this field. So let me invite Susan Walls from the South African Insurance Association to understand from her how insurance associations are seeing the developments in this entire market and this entire space. So over to you, Susan. Please go ahead with your thoughts.
Thank you, Pranav. Good afternoon, everybody. About South African Insurance Association. Our association is the representative body of the short-term insurance industry in South Africa. Short-term in South Africa refers to all non-life business. It includes the insurance of assets, commercial and personal assets, commercial crime insurances, liabilities, motor, all those types of insurance, anything that is non-life related. We represent the industry to all relevant stakeholders to ensure a sustainable and dynamic industry. SAIA is a membership of almost 60 members. which includes all the categories of short-term insurers, including reinsurers. Our members abide by our code of conduct, and this ensures adherence to best practice industry standards and self-regulation. We played quite an important part in getting all stakeholders together and to discuss issues within the industry, what is best the way forward, and how to progress the industry on the whole. Our vision is to promote and represent the interests of the short-term insurance industry while leading, enhancing the efforts of the industry to become recognized and trusted as an important contributor to the whole of the South African economy and to society. Currently, one of our focus projects is to build trust within the industry, not just between policyholders and the insurer, but all stakeholders throughout the industry. This would include all retailers, repairers, contractors, all service providers in the industry. And focusing on trust within the industry, we realize that education plays a huge part in building trust. We at SAIA realize that distribution and technology have an ever-increasing role to play in helping us as insurers build trust and partners in the process. To build trust in an industry which is often seen in a negative light, we at SAIA acknowledge the importance of the education, and we spend a lot of our time on education. Improving value through technology. There's been an estimation that there's a $10 billion opportunity in South Africa if insurers follow through using technology and the whole digital space. South Africa has been very slow to go digital. There's a survey by Accenture which shows that the local market prefers and is ready for digital engagement. If our local players can meet this need, they can increase their gross written premiums by $10 billion by the year 2020. And that's quite a huge increase. But to do this, they must reimagine their business, almost reinvent their business services and solutions, focusing on the customer. They need to embed digital into their systems and processes. And in doing this, they also need to meet 5 imperatives that will help them address key customer challenges. These 5 imperatives for success are to be accessible, to be trusted, to be responsive, to be relevant, and to be smart. To be accessible, customers want to interact via multiple channels. Insurers should build the capability to meet evolving preferences. Insurance providers need to be accessible to all channels of customers' choice, not just the insurer's preferred choice. The channel preferences continue to evolve. Currently, more mature
We seem to have lost Susan.
The second imperative for success in our industry is to be trusted.
Good to have you back, Susan. We had lost you for a minute. Go ahead.
Oh, apologies. Where did you lose me from? From the imperatives?
No, go ahead. You can start with the be trusted part.
Okay, great. All right, the second is to be trusted. Data management and ethics are core to building trust, which is essential to encourage digital engagement. Insurers need to ensure transparency and to inspire trust with their customers, particularly with regards to client data. Digital trust is the currency of this digital age. If there is no digital trust, insurers will not be able to see the benefits of this. The third is to be responsive. Insurers must address the key areas in which they're failing to meet customers' expectations, such as the efficiency of claims. They need to respond fast, show where there is either no reaction or a slow reaction. This will drive customers' decision to change their service provider. Insurers must respond timeously. The fourth of the imperatives for success is to be relevant. Insurers need to have a 360-degree view of the customer, to understand their customers' needs, what they want, and then to personalize the interaction with their customers via the customer's preferred channels. This will enable insurers to innovate and to partner with other often unrelated service providers. They'll link up with providers which offer non-insurance related services. The last of the imperatives for success is they need to be smart. Insurers need smart solutions such as telematics, present significant advantages but will require strong partnerships. Smart solutions such as telematics are both a challenge and an opportunity for distribution and the use of technology, and they can most certainly assist and aid in the building of trust. In our industry, as earlier mentioned, we have not been very progressive in the whole digital field. In the last short while, there have been some companies who have been delving into direct online business, and I was about 12 months ago, I was with a company who were one of the first to launch a direct online insurance product for both personal and commercial, where there's no interaction other than direct online business, from cradle to grave, from getting the quotation right through to arranging the debit order and premium payments. And it's one of the first, and it's the way that our industry really needs to move. Thank you, Pranav.
Thanks, Susan, for bringing out various perspectives and, of course, the requirement for multiple channels to be as close to the customer as possible. Also, the potential and setting out the blueprint, or should I say the challenges for the insurance industry and what needs to be done there. You also nicely pointed out the importance of understanding the customer needs and then responding to that. And I guess that is where a lot of work has been happening as far as technology interventions are concerned. And I guess at this stage, let me invite Munir Duri to talk about how they are assisting and extending the reach of insurance to hitherto unreached communities. As I mentioned, Munir Duri is the CEO of Kifiya Financial Technology PLC in Ethiopia and has done extensive work in technology-led interventions for financial services. So we look forward to understanding from you, Munir, on how technology-based initiatives can help the insurance industry. Over to you, Munir. You have control now.
Thank you, Pranav, and good afternoon. So I don't seem to be able to move the slides. Pranav?
You've moved them quite a bit, Munir. You'll have to come back.
Okay.
Yeah.
Okay. Sorry for that. Basically, Kifiya is a payment service provider and enabler of digital financial services in Ethiopia. Effectively, our vision is to contribute to simplifying and improving people's lives by making transactions simple, and in a vast country with a large mass land accessible, affordable, and secure. The way we achieved that is by building an integrated, scalable technology-based infrastructure, and for us that means back-end platforms and front-end channels. And our channels are both third-party agents, and we also build our own single payment point infrastructure across the country. We have been established at the end of 2010 and operational in 2013. We are close to 700 people, and most of our services are run on 5 technology platforms. These technology platforms are mentioned up there, but mainly there are currently we offer or provide services as follows. The first service that we have is we provide bill payments, or we enable close to 1.5 million people every month to pay their utility bills, water, electricity, and telephone bills through us. The second service we have up and running is over 380,000 people a month book and buy their long-distance bus tickets through our system and agent network. The third main service that we have is we are a national distributor of airtime vouchers for Ethio Telecom across the country through 15,000 agent points that we have. One of the services that we have launched very recently is around microinsurance services. So there, what we have done is we develop products, and we have about 4 portfolios. One is on crop, the second around livestock. These are agriculture-based, actual index-based microinsurance. The second is a hospital cash product that we are developing, and a bereavement product. The word Duri in Ethiopia reflects bereavement product that is indemnity-based that we are currently developing. So our value proposition for the insurance sector is first and foremost developing the products, and then allowing them to be accessible through our locally hosted or local cloud-based microinsurance service platform, which allows insurance companies to access the products and manage the claims and policies. And then linking it to our digital payment platform and our agent network, we allow the distribution of those products to mainly rural customer bases. So if you look at the specific services that we run, the first one is we're providing access to distribution setup. So effectively, our digital payment platform allows agents to enroll customers, to collect premiums, and in the Ethiopian context, a policy has to be printed out, and when and if claim is to be paid out, the agent can effectively pay the claim, or the claim can be paid into an account of the customer. There, what we do is we recruit, train, and build and manage the agent networks and enable them to sell microinsurance products. But it is the insurance companies that are the underwriters. Currently, we have a network of 1,000, and in the next year, we are planning to roll it out to 15,000 agent points. So that is the first service that we provide. The second is, if you look at our cloud platform, what it allows the insurance companies, it creates a marketplace, a digital marketplace, in which insurance companies can pick up the product and then configure it according to their operational expenses and add other administrative expenses and allow them to manage the life cycle, the policy, as well as the claims side of it. So effectively, we allow the insurance companies to manage the insurance policy digitally, so moving them away from a paper-based environment to a fully digital. The second part of this platform is that it allows reinsurance companies to have insight in data, and I'll come back to why. The third thing that we do on the platform is we act as a calculating agent around the index or the announcement of the index-based products. So this platform has the ability to enable the insurance companies be attracted to this micro insurance sector and makes it viable to them and manage the costs both from a management of the policy and the claims life cycle, but equally from a reinsurance perspective, because of the lack of data, reinsurance companies used to increase their margin. So based on this ecosystem that we have created, a pilot was launched last year with Agricultural Transformation Agency in Ethiopia, which on the platform 2 insurance companies participated, and close to 4,500 policies were issued with a sum issued value or assured value of close to 210,000. And a month ago, the index triggered, and claims close to $43,000 were paid to close to 1,700 smallholder farmers. Because of the success specifically around what the index has triggered and what the farmers have felt on the ground, with an approximate accuracy of around 97.8%, what the Agricultural Transformation Agency and the government has decided this year in April to roll it out to 4 regions and 200,000 farmers, and increasing or adding 1 more insurance company to participate in the underwriting. So that's effectively our experience from the leveraging both technology to create markets and to enable the distribution of microinsurance. Thank you.
Thanks a lot, Munir. You very nicely highlighted how technology has helped insurance in gaining access to markets, training of the sales force, understanding what the agents want, as well as moving forward for insurance companies to have access to products on a common platform. And this pilot nicely shows about how more than 1 insurance company has participated in this pilot and sold the same product, and now with claims having been paid, hopefully the trust issue that Susan was talking about earlier would also be seen by the customers, as well as with you acting as the calculating agents, would be able to use this technology in explaining the logic behind the claims, and as you said, the scale-up can happen. So this looks very interesting from a perspective of the customer as well as the delivery person, the insurer, who are participating in this process. And we'd like to understand more from the insurers on how they are using this technology, and we'll invite Balachandran from India to share his experiences. But before we do that, you brought about a very interesting issue in how claims can also be settled using technology. and channels are adopting this to provide greater value to the customers. So we'd like to understand from our audience what they feel about this issue of claims. Just 9% had said in the initial poll that companies can help in assisting, the channels can help in assisting as far as the claims is concerned. So let me open the poll and talk about 3 or 4 things that distribution channels can perhaps play a role in, and then understand from the customers, from the audience, what they feel about all these things. So can the distribution channel, being present in all these places that have not been reached earlier, play a role in the claims process, whether it is on reporting and recording of claims to the insurer, or they can help in connecting beneficiaries with appropriate service providers and helping them with procedures, form filling, etc. Being present locally, can they help in controlling frauds, which can help keep claims in check and help in cost reductions? Can they play a role in payment of claims, disbursement of claims when they are supposed to be done? Or can they play a role in all of the above? What does our audience feel about it? Please go ahead and put in your choice and your vote now. Can channels act as only reporting agents? Can channels act as support services in helping customers understand which service provider to go to in case of health, or which agency to go for to claim the money and filling up the relevant forms, etc.? Can they actually provide feedback to the insurer about the claim itself and help keep malpractices in check? Can they help in payment of claims and disbursement of the claims amount? Or can they help in all of the above? Let's keep it open for 5 more seconds. Interesting responses. Can we close the poll now? Thank you. Wow. A lot of you feel, almost 3/4, that channels can play a role in all of the above, while a few of you feel that reporting and recording of claims can be a very, very effective aligned activity for the channel. Yes, they can create reporting templates, they can provide information on processes and documentation, they can help in taking the customers to service points and service centers. Some of you also feel that they can help in controlling fraud. So if channels are involved in preliminary investigations, they can provide feedback on what has actually happened on the ground, and they can also do the backflow, act as spokespersons for the insurance companies in providing reasons for acceptance or rejection of claims. And on claims payment, which only 2% of you feel they can do, yes, we'll understand from the insurers how it can, but we certainly believe that they can act as a pool for settlement of small amounts, whereas the insurers can take care of the big amounts. So thank you for these inputs, and let us understand how some of these things have happened on the ground. And let me invite M.K. Balachandran from HDFC Ergo Insurance Company in India on how they have been doing their inclusive insurance march, marching into rural hinterlands of the country through technology-led distribution. I do hope, Balachandran, you can hear us, and you can please unmute yourself and go ahead with your presentation. Over to you, Balachandran.
Yes, hi everybody, and thanks Pranav for the quick introduction. So in this short presentation, we are trying to discuss and engage yourself with certain channels that we use for technology-enabled distribution for insurance products. And these channels, whatever we are using, are predominantly rural insurance channels, wherein we face certain challenges in terms of reach, in terms of easiness, in terms of transparency. So we have tried our best to address the challenges through technological interventions and improve our distribution. So coming to the first slide, it's all about telling regarding that innovation that we have tried to improvise here in India for our crop insurance segment. So here in crop insurance, as you know, India being in a predominantly agricultural based country, there are a lot of challenges in terms of reaching to the farmers for covering them, and since the geographical spread is pretty high, pretty large, and we have other issues in terms of reaching these farmers, and even the farmers doesn't have an option nearby to get themselves enrolled for the insurance. So all these were the challenges that we were facing, and there was a lot of issues in terms of transaction time for claim settlement or transaction time for policy issuance. So all those things were addressed with a simple technology of an Android-based application which we carry, which we tell ourselves as an office in bag, wherein the particular salesperson carry this Android-based application along with a portable printer. So he goes to the farmer doorstep, he announces, we do marketing awareness campaigns in advance and tell them we will be available in this location for enrolling the farmers in these dates. So the farmers assemble there, and all the enrollments are happening through this mobile-based application. Policies issued online on a real-time basis. We have a portable printer. So the person who is going there will be sitting beside a tree, under a tree, or maybe in a village office, or maybe in a school, wherein everybody will be the farmers will be assembling, and they will be taking this policy via this online platform. So this addresses a lot of challenges that we normally face. In terms of customers, it eases their traveling time, because normally they have to approach a nearby bank or maybe a nearby taluka village office to take this insurance policy. So if you are going at their doorstep, this is the most convenient way wherein the customer is benefited, because they have the insurance then and there itself. They get an online policy printed and issued on the spot. That improves the transparency of operation, the turnaround time. The customer is pretty happy because he's seeing whatever is being entered. So he can verify the insurance documents right away. Earlier in the conventional mode, it normally takes 1 week or 2 weeks to get the policy delivered at the customer doorstep. So this office in back actually helps us to reach the farmer in terms of coverage at their doorstep, and that helps us in improving a lot of things both at farmers end and also at the insurance companies end. So it's a benefit aspect to both the parties. So this is something regarding crop insurance. So in the next slide, I will be sharing an experience that we have actually developed for getting to the reach to the rural mass. So it's through the business correspondence models. These BC models are the banking correspondent models, channels in fact. So they go door to door for banking activities. So they open bank accounts, they do transact, they can accept money, they can transact, the customers can withdraw money through these BC representatives. So they go to the doorstep with a port machine, with a biometric identification machine. So whatever transaction happens basis through this biometric identification, the customer identifies himself and authenticates the transaction, then he does the banking transaction. So we have tried to leverage this channel for insurance sales. So a person who is doing a banking transaction can very well opt for an insurance policy. So once he opts for the insurance policy, the particular the person who is handling this channel, he accepts the insurance details within the post machine. The customer authenticates with these biometric details, and all the data required for insurance is pulled to our server for an online policy issuance, and the customer gets an immediate SMS, and the premium is deducted from his account itself. So it's a pure, again, an online transaction mode wherein insurance is delivered at the doorstep. So here also the customer doesn't want to go anywhere to get his policy. He can get the policy at his doorstep, and there is transparency and there is easiness in the process because everything happens in the real-time basis. So here also we are addressing the challenge of reach, addressing the challenge of delivering time because the policy is delivered on time. So this is one product, one project that is running in a large area base here in India. So that was regarding the business correspondent model. And in the next slide, I will be talking about a new innovation in terms of distribution channels through kiosk. So these are the common service centers. These are the centers at the village level. So in India, we have close to 1 lakh, or I would say 100,000 such centers, active centers across the country. And these centers are located within the villages. So in a village, maybe there will be 2 or 3 subsequent counters will be there. So they will do all the government to citizen transactions and also business to citizen transactions. So they are equipped with computers, they are equipped with broadband connectivity, printer and the scanner. So they will be able to do banking transactions, they do the unique identification enrollment of the Indian government. They do land report registrations, they do mobile recharges, they do DTH recharges, they do online ticket issuance. So they do all kind of online activities. So we have leveraged and we have used their presence and their technological advancement to issue online policies. So we have 11,000 active centers now across the country. So they are equipped with, they have been trained for product awareness, they have been trained for policy issuance awareness, and these centers, since they are located in a village and since the villagers normally go to these centers for all their e-governance activities, so the center forms an activity center, and this is being leveraged for insurance sales. So here also there is no paper transaction happening. Everything, details, whatever is needed for the policy issuance is uploaded then and there itself by this particular village level entrepreneur. So these are village, the centers are owned by the village level entrepreneurs. So they do upload these documents and the policy is issued online and the customer is handed over to the policy then and there itself. So these again, since these are located in each and every village, this addresses the challenge of reaching last mile, and it also helps in reducing the transaction time, and these centers also act as a claim registration center. So if a farmer or if a customer is having a claim to be registered, he can go back to this center wherever he has taken this policy and he can register a claim, and this center also aids them in settling the claims and registering the claim and uploading the requisite documents for the claims. So it's again an end-to-end service center wherein both policy issuance and claim settlement happens. Coming to the next slide, within the common service center, it talks about the different kind of products or different kind of services that is being offered. So here, if you can see, we can see this photograph of the center. It's a small, maybe a 200 square feet room, and then they do have biometric authentications. They do eKYC authentications for the transactions, and we do different types of products, including motor, personal accident, farmers, crop insurance, fire insurance, and we are one of the leading players in this particular segment. The next slide, we talk about coming back from distribution. We are changing to a segment wherein we have used mobile-based applications for enhancing the claim turnaround time for crop insurance. So in India, the crop insurance is a yield-based product, and here the crop cutting experiment happens in the field, and it's a tedious activity of conducting crop cutting experiments across the country, and the number of crop cutting experiments are very huge, and it's a manual activity and the data entry happens manually. So in the conventional mode, it took around 6 to 7 or maybe even a year to settle the claim because the data doesn't transfer online. It is a offline mode of collecting, recording the data. Then it comes at the state level collection of this data, and then it passed to the insurance company for claim settlement. So here we have tried to use a mobile-based application wherein online and real-time capture of the claims procedures and the claim crop cutting experiment is being done at the crop or at the farm level. So the person who is witnessing the crop cutting experiments takes this app. It is a geo-coded app, so we very much make sure that the person has reached the particular the field, and whatever is being done in terms of crop cutting experiment is be captured in this app, and the data is entered real time with the customer and the farmer authentication, and photographs is being captured. So there is the data transfer happens real time to our server. So the normal delay in data transfer of claims which was there in the conventional mode is being overcome through this mobile app. So we reduce the turnaround time in terms of settlement in the crop insurance claims. So this is done through GPS enabled data transfer facilities. Then the next slide, again, it's all about an application that we use for livestock insurance. So here also in the conventional mode of livestock insurance in India, it's all about going to that particular location where the cattle is available. The veterinarian or the paraveterinarian goes there, he tags the animal, he writes the cover note, he takes the photograph of that animal, then he sends everything back to the insurance company as a courier for policy issuance. So again, the turnaround time is very high. In terms of claim also the same thing happens. Whenever a claim is reported, the particular surveyor or the veterinary doctor goes to that particular location, he identifies the carcass, he takes the photograph, he fills the claim form, he again sends all these hard documents back to the insurance company for claim settlement, which takes time, which ideally takes 15 to 20 days for claim settlement. But here also we have tried to build in technology to use of a mobile-based application, and all the tagging and claims activity which is supposed to happen at the farmer's doorstep is being done through this mobile-based application. So the data capture of the particular animal, the photograph, everything is taken live through this app, and it hits our server on a real-time basis, and the policy is also generated on a real-time basis. In the time of claim also, the same mobile application is being used. So whenever a claim is reported, the particular person goes there, he identifies the animal, he takes the photograph of the carcass, he fills the claim form which is embedded in the mobile app, and he takes the authorization of the customer, and he sends it back to the server for processing. So it again reduces the turnaround time. So in the normal claim which used to get settled in 4 days time, now it got reduced to 2 days or 3 days, because we are getting the data on a real-time basis. So we just want to analyze the data and then do the audit requirements and then settle the claim. So this has reduced the turnaround time, and it has helped us reduce the cost, and there is a trustworthiness has been built up in the farmers, because normally they used to get a claim whenever the animal dies, they have to wait for 20 days or 21 days to get the claim. Now they will get it in the next 2-3 days time, and the policy is also generated online. So that has improved the transparency and customer satisfaction to a lot. So that has helped us address a lot of challenges in the conventional method of livestock insurance. So to sum up, these are the certain activities or maybe certain technological interventions that as a company that we have taken up in the rural space, and we have tried to address the challenges that we face day in and day out in the rural insurance market. And we feel that the technology has helped us a lot to enhance the customer satisfaction, that has helped us to reach the last mile, and that has helped us to reduce the operational cost to a large extent. So it's all about reducing the turnaround time, getting the customer's claim settled as fast as possible, giving over the policy documents on a real-time basis, giving him an option to register the claim at his doorstep. So these are certain technological interventions that as a company that we have taken up. So that's all about which I thought like I would like to share. And back to Pranav.
Thank you, Bala. Thanks for highlighting these issues that you said about doorstep delivery of insurance and covering the last mile. Also, this health insurance application which helps in enrollment of customers directly on the phone, they are all combined to help in assistance of actually being accessible, being reactive, being responsive. A lot of these issues were brought about by Susan in her description of what can help in insurance companies being successful. So it's good to see that trust is being built through the platforms as defined by Kifiya, as some of the technology platforms as you have described, Bala, and therefore insurance is becoming more and more relevant. And you also mentioned an important aspect of data analysis that can help in understanding more about customer behavior and can help in development of customer-centric policies being developed, need-based policies being developed, rather than off-the-shelf products being talked about and distributed in the market itself. We've been receiving a lot of questions on various aspects, and we'll have good time to discuss them as we go along. But before we pass on and open the house to questions, I'd just like if you folks can summarize some of the issues that you've talked about, and before reacting to questions, have some concluding thoughts to share with the audience. So very quickly, let me start in the reverse order right now. Bala, what are your concluding thoughts?
As I said earlier, it's all about reducing the turnaround time, enhancing the scale. It's about improving the customer satisfaction and trustworthiness, which actually we can do, or we have tried to attain through the use of technology-based applications. And we have been fairly successful in identifying these parameters through our interaction with the customers.
Okay. Staying with technology, Munir, what has your experience been?
I think if you look at the Ethiopian angle, that the success of inclusive microinsurance requires a concerted ecosystem approach. And it is very critical that while microinsurance have shown a lot of potential in various areas, the question is still out whether scale can be achieved and a very a viable market created in the absence of technology, digital technology, that both reduces the cost of the management side as well as improve the reach side, which is the distribution, enabling the distribution channel to access clients.
Yeah, so thanks for these thoughts on viability and sustainability through cost and time efficiencies and better understanding of the customer, which actually get reflected in what Susan said. So Susan, from an insurance industry perspective, what do you feel about this entire trend in this technology-led distribution?
Nav, I think it's quite clear by what my co-panelists have said that with both of their companies show that without embracing digital technology, you won't reach the customers that you need to reach. You won't get the data that you need to have. And it's absolutely vital that not just insurers, but everybody embrace technological and digital advancement. Insurers must particularly just reinvent their services and solutions, those who have not yet done it, and just focus on the customer, and they must just seize the digital opportunity. Thank you.
Okay, great. So keeping the center as the focus of product development and process development and channel outreach, using technology to help you in doing this, as well as seeing the results in terms of scale, transparency, customer satisfaction, greater value, and building trust seems to be the entire focus, and distribution channels also need to re-energize, reinvent themselves in focusing on the customer and delivering better value. And from a supply side, insurer side, there is this need to embrace technology to bring about efficiencies, both in costs as well as in time, turnaround times, which can help in developing trust and being seen as more responsive, and therefore creating a viable market over a period of time. So I'd like to thank the panel at this stage for their initial views, and now request them to react to various questions that we have been receiving, and we've been receiving some extremely interesting ones from various people. I will try and get through most of them, but like I said, just a quick word to the audience. If we are unable to get through to a few, please don't worry. We will come back to you with responses from our panel as well as other views on that. So let me start with a question that Dorothy has been asking, and it's directed towards Munir. So the question from Dorothy Maske for you, Munir, is that since you have various companies participating on the same platform, how do you ensure competitiveness or cooperation on part of the insurers who are selling the products on the platform?
Okay, should I answer it now or wait for other questions?
Go for it, because with this is combined the issue of the claims process, etc. So you can take us through the quick process and how do you ensure competitiveness or cooperativeness between insurers on your platform.
So if you look at the market size for Ethiopia, we have about 100 million people, and close to about 16 million people are smallholder farmers. The economy, 40% of the GDP relies on agriculture, so the size of the market is bigger than any one or two or three insurance companies. So from the onset of our initiative, we had various workshops in which our first task was to show the potential market for the insurers. So early on, we had put 5 insurance companies, and through a series of workshops, made them agree to share the market potential. Some from a regional share perspective, some using different products and or variety of the products that we have. So the way we approach it is through a series of workshops showing them the potential of the market is bigger than the sum of all insurance companies added together here. So that was our approach.
Okay, and just a quick insight on this 43,000 USD claims that were distributed. How were they distributed? Did the distribution company ensure that using your platform they reached the customer directly?
So what happened was, the one insurance company, which had the smaller insurance, decided to pay into accounts at the microfinance institutions where the smallholder farmers had an account. So a certain portion was paid into savings accounts, and a substantial amount also collected the money through the agent network and cash out. So it was a combination of both, and the choice was up to the smallholder farmer whether they want to receive cash or paid into an account.
Okay. So yeah, we'll come back to this issue and discuss it again with the insurers also, and get Balachandran into this entire claim discussion. But before we get into this, we have a very interesting question that I'd first request Susan to respond to, and then perhaps Balachandran, which is a question from Christian Lutz, and he's talking more about insurer behavior when he asks that technology is one aspect for sustainable development, but there is also a need for long-term demand-side development, creating trust, etc., some of the aspects that you brought up, Susan, earlier. But to what extent are insurers willing to focus on long-term industry development over short-term profits and short-term bottom lines? What do you see happening from an association perspective? What is happening, or your experience earlier as an insurer? What do you think is the issue here on companies treating investments more as investments and less as costs, and looking at amortizing them over a period of time rather than what will happen next year? Susan?
Thank you, Pranav. I've definitely seen over the last short while that insurers are focusing a lot more on a lot of what we've just spoken about, customer requirements, what the customer needs. And by doing this, they're ensuring long-term investment in that client. Whereas if they're not focusing on that client, they're not investing in that client is going to move on to somewhere else. And definitely in the market in South Africa, I've recently seen, or not recently, over the last few years, we've seen the move to customer centricity rather than just bottom line figures.
So you have a bottom, should we say double bottom line being tracked, or why double, triple bottom line being tracked, where you have profits or lack thereof, you have the social considerations that you mentioned, and you have the customer perspective being tracked. So that's interesting. But let me also ask Balachandran to come in on this and talk about all these wonderful technology issues that he talked of. How are they inbuilt into the costs, and how is his profitability or investment in his entire market in rural areas considered and looked at within the company? So Bala, how does all this technology and investment in long-term customer trust building happen in your insurance company?
Coming to what we do here in HDFC Ergo, particularly in rural insurance. See, we take rural insurance in a different aspect. Normally all the companies, most of the companies actually do it for the social obligation requirement that is being put up by the regulator. But here, at least in our company, we are looking it as a business opportunity rather than as a social obligation commitment. So here, whatever we have done in terms of technological developments or advancements is being done looking at a long-term perspective. For example, the kind of technological advantage, technological things that we have done in livestock insurance or maybe the crop insurance, these are certain segments within the rural insurance where we feel that have huge potential in terms of both in terms of business opportunity as well as in terms of customer involvement, because these are two typical products which is actually the need of the rural sector. So we are trying to focus on these two products and build in the technology in such a way that it is both advantageous to both the parties, not only to the insurance company but also it helps the customer in the long run, because as I discussed earlier, that helps in their aspect of considering insurance as a product which is accessible. In the current situation, the accessibility of insurance over the channels from which they can get insurance in the rural space is entirely very, very difficult. So we are trying to address the challenge of reaching the last mile. So it is actually advantageous for both the parties. So we are looking at a long-term perspective rather than a short-term investment.
Okay, so that's an encouraging trend, and I hope Christian gets a lot of confidence from that yes, companies are looking at long-term rather than waking up tomorrow into profits. Munir, I'm coming back to you with an interesting question from Sonia Kelly. And thanks, Sonia, for making it up early morning and producing our webinar with your early morning cup of tea or coffee on the East Coast in the US. The question is, how do you educate and maintain quality in the agent network whom you've been training with these technology platforms? Has that ever been a platform? How do you get feedback on how these agent networks have understood what you've taught them, and how do they react to the technology influenced and technology-led training?
Okay, quite interesting and a very challenging task at that as well. So, I mean, if you look at the way financial education has been done in our initiative is we use two angles. The first angle is there are what is called development agents. These are effectively extension workers that are used as the first point of educating from a customer or consumer side. From an agent side, what we do is we select existing infrastructures. Specifically, Ethiopia has a set of about 15,000 multipurpose cooperatives that buy outputs or produce from the farmer and sell inputs. So one of our agent networks are already in business in the locality of the potential customer. So they are very stationary. So the education is provided from two angles. One is the use of technology, which is our work as Kifiya. We do that continuous trainings, and we use both hands-on training through the development agent, but we have developed a tool, an online tool that allows us to scale our training programs to the agent. Because at the end of the day, the challenge of the agent network is we cannot train every agent at every location. So we have an online tool that we have developed that we deliver it. So the product education is part and delivered through the agricultural transformation agencies, development agents. They have a network of around 18,000 DAs, as they call them, that provide multiple educations around the use of technology in agriculture, seed, fertilizer, and agronomy. And one of the additional program that they have is financial education, both to the agent and the customer. In terms of feedback, we rely on the DA, again, the development agent network, for whether the use of the technologies by the agents, as well as the acceptance from a user perspective, I mean from a consumer perspective. In terms of data and the ease of use, the platform already has an inbuilt data analytics that we do in the back end in terms of measuring how many minutes did it take for enrollment to happen, how many minutes did it take to the premium to be processed, and things like that to see the ease of use feedback. I hope I've answered your question. Hello? Hello?
Yeah. We are here, Munir. I'm sure if there's some feedback, we'll share it with you from the questionnaire. So thanks for this. We have interesting related questions from Ignatius Pumpini, which are related to using technology and partnerships and how can they help in building trust. So the question that Ignatius seeks to answer is that how would you use technology to manage partnership risks in insurance distribution? Because insurance is distributed through partnerships, through channels. How can technology help in building that up or enhancing it? And relatedly, he also asks, how can you build trust using mobile network operators as your distribution channel? So perhaps we can have a quick reaction from you, Balachandran, on the partnership aspect, since you have a variety of partners and distribution channels. And then I can also assist in reacting to the MNO part of it. Balachandran?
Yeah. Just coming to the point of building up trust in terms of
Bala,
both customers.
Bala, can you please keep the mic slightly closer to your mouth? You kind of fade out slightly. Yeah, go for it, Bala.
Right. So in the different kind of partnerships in technology that we have built up, one is through the common service centers, which I discussed in my slide. So there these services are managed, or the centers are managed by the village level entrepreneur. So he being from the particular village, that is the major point which strikes the trust part, because the person who is from that particular village always trusts somebody who is known to him. So in our conventional rural distribution channels, we either have an agent or a broker who is operating from different locations. So they might not know that person personally, but in such channels, the advantage what we have seen in fact in the ground is that since they know them personally, that increases the trust factor. So they feel confident that okay, if something happens, there is somebody there whom I know who I can approach and lodge the claim and get it processed. So that is something that I have seen has helped us improving the trust factor. Plus the use of technology has actually helped us in controlling a lot of moral hazards in the ground. For example, in the case of livestock insurance, the major hazard that we face is at the time of claim, there should be an authentication which should happen. So the use of mobile technology has actually helped us in controlling that fact to a large extent. So whomsoever is going as a surveyor or maybe as a person, whomsoever is going has to go to that particular animal where that animal is located. And he has to identify the carcass, take a photograph or maybe a live video itself and then upload, and that itself make sure that he has gone there. Plus in our crop insurance application, there is a geocoding which is happening. So that also ensures that the last mile reach is happening. So wherever the claim is there, the particular person has or the channel partner reaches there. So I guess these are certain points that helps in controlling the distribution channel to an extent, and also to build the trust factor in the customers. So that's what I would like to say in this.
Okay, thank you. But these are all issues of mobile networks. I mean, it's mobile network agnostic. You can be on any mobile network and transmit this. I think Ignatius also wants to understand how can an MNO help in building trust, and there I'd like to just pipe in a bit before I request my panelists, is to say that two things are there when you work with a mobile network operator. One is that the reach is tremendous and you get an immediate reach into customer base using that mobile network operator as their operator. So they are the MNO's customers that you deal with. So it's best to support the MNO in building a trust and building a link with the product that is being offered by them. So if you can help and ensure that through the MNO the customer understands the product clearly, through the MNO the customer can get his claims in a reasonable time, and thereby the MNOs have a big role to play in either using the mobile wallet platform, or even if payment claims can be done through airtime, it really impacts and has a good impact on the customers themselves in their understanding the insurance and building trust on the insurance process itself, and can be useful from a long-term perspective for the insurance industry. Which actually brings me to an interesting question, and I guess Susan, I'll request your inputs to this as well as from other colleagues on the panel, is related to the regulatory aspects of technology-led distribution. Oscar Verlinden asks if there are any regulatory legal barriers that hinder the growth or realization of inclusive insurance distribution. What can be done to overcome or help it? Susan?
Pranav, definitely. There are a myriad of legislation that come into play in these sort of instances. And legislation is always there for a reason. So, in my opinion, I feel that we must just meet the legislation and adhere to it and follow through and use it to our advantage as well, because legislation will go both ways, from our, for our benefit and for the mobile user's benefit, and then again for the client. The most important part of the legislation will probably relate to client data and things like that. So I personally think that legislation in itself is there to be more of a benefit and to prevent the unnecessary, or what can you say, devious minds, whatever you want to call it, but it's there more for a benefit than it is to hindrance.
Okay. Munir, in your view, since you've been pushing the technology platform, have you come across any of such issues on the regulation side?
I mean, from a regulatory perspective, any change, especially when it involves technology, challenges the regulator in how to issue directives of regulation. So if you look at, in our case, what one of the major challenges was, how can a third-party distribution channel be selling insurance? It's not only the technology, it's also the question of how can a third-party channel be what the client knows as the seller of the insurance. So what we have been fortunate enough with is two things. The first thing is, in terms of distribution channels, we have chosen existing regulated, not from a central bank perspective, but Ministry of Agriculture regulates the cooperatives. Because of that, the regulator did not have a major challenge. But regulators, from our experience, always look at not only the technology, but the distribution channel as well.
Okay. Okay, I'm just doing a quick time check, and Balachandran, I'll request a quick response from you on a question that is asked by Jeffrey Altman, who wants to understand the role that distribution channels, and especially technology-led distribution channels, can play in renewals, retention of customers and policyholders, and thereby help in bringing about sustainability in insurance programs. So how do you ensure stickiness to your insurance products through these various channels that you've talked of?
In this case, I would say that it's all about the data analysis that we do, because technology interventions help us have real-time database with us. So we can do good enough data analysis in terms of renewal retention. So for example, in our common service center case, we feed that centers whomsoever has issued a policy this year. In the next year, before just 1 month before the renewal date, we send feeders to them giving the details of the policies that are up for renewal. So they do their own kind of follow-up with the customers to get it renewed, and since they are located nearby the customers, it is easy for them to locate these customers and get them renewed. So in my experience, I feel that the technology has actually helped us in improving the renewal retention part, and that is basically because of, one, it is because of technology, plus it is because of the use of the channels that we do. For example, in the case of the business correspondent models also, they visit the doorstep of the particular customers for banking transactions. So whenever the renewal is up, he is getting the update regarding the renewals, so he follow-ups with the particular customer to get it renewed. So that reach is something that is helping along with the technology for renewals, and since there is technology enabled, the renewals are also instant, because since the data is already there with us, it is easy for us to renew the particular policies. So that is actually enhancing the renewal retention part.
Okay, so it helps on instant on-ground decision making and approach to the customers. So that's interesting. Let me try and combine two of the questions more around education and expense on this on technology, Balachandran, since I have you online. Dorothy has asked, this entire enrollment on the ground, do you need the farmers who are essentially illiterate and poor to have smartphones, or is it the agents who does the smartphone enrollment? And relatedly, Yasin Fall has asked, how do you educate farmers using technology on the product enhancement? What have been the main issues encountered? Just a quick response so that we can then wind up after that. Yes, Bala.
Yes, in terms of customer education or maybe the use of technology at customers' end, as of now, I guess it is still in a development stage, because all the smartphone and all the technology is being used by the agent or the channel partner, or maybe the whomsoever it is going to the ground for enrollment. So the farmers hardly use this platform for enrollment. Self-enrollment platforms are hardly being used, because we do have that facility being set up in our website, but hardly any farmers use that for enrollment. So I would say, like, the use of technology for enrolling at the customer's end is still yet to develop. But in terms of awareness, this technology has helped us a lot in terms of creating a curiosity in the ground. For example, when we went to the field for our policy issuance in that office in bag kind of thing, so we were sitting under the tree and just issuing the policies over a computer on a printer, on a portable printer. So that has created a curiosity among the farmers. Okay, something is happening here, somebody is coming here, they are sitting there in a tree and they are issuing something which is related to crop insurance. So there is a kind of curiosity that has been built up, there is a word of mouth that has spread, and people start coming in and inquiring what is happening. So what we felt was that the technology or something new that we do at these villages create a kind of curiosity among the farmers to understand what is happening, and that helps us in kind of creating the awareness and kind of doing the marketing activity for further increasing the enrollment at the farmer center.
Okay, so farmers don't need to invest in the smartphone. It's the agent who does the enrollment mostly. So that's fine, and then he uses the technology available with him for customer enrollment. So that's great. I think we are running slightly tight on time, and we'd like to conclude the question and answer session here. Any questions that we do get left out, we would certainly be getting back to you with responses on that. And Muzammil, to your question that can they be available in a soft form, so yes, we will be uploading the webinar and the discussions therein on our website as well as on YouTube, and as well as the entire PowerPoint presentation on SlideShare. So you will have access to them, and you will be notified shortly in the next couple of days when it has been uploaded, so you can review them and understand the questions and answers better. And before we conclude, I think it's let me quickly talk about a perspective here on how distribution and technology can help in this entire process of making it more responsible. So Joost, if you can help me move to the next slide. Yeah. So we certainly believe that technology-assisted distribution, and here I am reacting to one of the questions that has been asked on what is the message that can actually go through, which Guy wants to understand, is that technology-assisted distribution, and since distribution agencies are in direct touch with the customers, can help in an insurer with this entire concept of responsible insurance, which means the products can be more appropriate in putting the customer at the center of the product development process. They can be more accessible, as Bala mentioned, with the last mile connectivity, helps in technology by becoming transparent through the platforms that Munir talked about, can be fair in terms of better understanding being afforded through use of technology. Responsiveness and appropriateness go lying hand in hand here, and respectful in terms of understanding that claims need to be paid fast, and we saw technologies which have helped in responsiveness and claims time being reduced, which can effectively be used by customers to protect themselves from risk. So that kind of summarizes a lot of the issues that we've been talking of earlier. And before I thank the customers, I thank the panelists as well as the entire audience for their attendance. Just a quick pitch for our next series of webinars that we have lined up for you as a part of this partnership with the UNEPFI PSI. We have plans to have a webinar on health insurance on the 28th of February, and then every month we hope to cover one more topic, one on SMEs and value chains, on agriculture and climate risks, and on insurance regulations in the times to come. So please stay tuned for our future announcements. We will certainly be reaching out to you and informing all of you on the dates of these webinars. We would also be uploading this on our website as well as on YouTube. So please feel free to pass them on to their networks. And we will certainly get back with any unanswered questions to you as quickly as possible once we have the panelists' feedback from there. So at this stage, I'd like to first thank the panelists for sharing their views, their time, and their interest and participation, as well as all of you for spending this time with us in understanding what is happening in the inclusive insurance markets and moving towards sustainability, as well as your thoughts, views, comments, and questions, all of which help us in understanding the needs and requirements better and help us in designing better interventions, both in the insurance market as well as in the dissemination exercise that we have undertaken. So thank you once again, and look forward to connecting with you again on our next webinar. Thank you all.